Hi, and welcome to the weekly market update from Morton Brown Family Wealth for the week of November 9th. I'm Dennis Morton here with Katie Brown. Katie, how are you?
Hi, great. How are you doing today?
Good, good. We finally got to fall after about 70 degrees over the weekend. Everything's falling, even the leaves in our office. This one fell down today. It's huge. We have enormous plants. Thank you to Mission Plant Company for those. So we're post-election. We're pre-vaccine, lots of stuff happening this week, Katie. We're going to do a market update, talk a little bit about European banks, which is kind of an interesting way to think about what happens when, the risk of things becoming normal again. And then we're going to finish up talking about spending for college, how students are thinking about college savings and one of the biggest bills they will ever face. So we'll start there. Katie, what are your thoughts on what happened this week in the markets with this massive rally?
It has been really fascinating. We've talked about this a lot inside of the office, but just where the rally is coming from. And once again, it's the case for diversification. This has been the year where we see different pieces of the portfolio proving value at different times. And this week it highlighted it even more than it has. It was just incredible this week. We did I'm going to pull up a chart here that kind of dives into where some of the returns are coming from this week. One of our areas of the portfolio, which has come under question quite a bit, is global real estate, and rightfully so. As everybody's going home, working from home, the question of, do you still need the office spaces? Are we still using real estate in the same way? So whether it's corporate real estate or storage, or if it's for retail, et cetera, are you still using it in the same ways? And we just saw, just from Monday to Tuesday, an 8% increase in global real estate. So I'll just kind of pop on that one for a second. But then other areas of the market too. And Dennis, do you want to touch on some of the other areas that we saw really outperforming?
Yeah, some other unloved areas, small stocks. I mean, the story, we've talked about this for 6 months. The story has been large US technology stocks. If you were in there, you were probably doing just fine. And the NASDAQ had done so well. But look at our laggard here, all the way at the bottom, the NASDAQ being negative over the first 2 days of the week. So, at the end of the day, you might ask the question, is the stock market up? The answer was yes, with abundance, so far the last few days. But the composition of that, what's leading the way, is really very different. We've talked about this rotation that for the longest time, technology has been leading the way with everything else lagging behind. And that's been the case for a decade. Monday was like a rotation, like a little micro rotation, where things like small stocks outperformed large, value stocks outperformed growth, real estate, as you said, Katie, spiking up. So yes, the stock market is up, but if you're trying to just pick the momentum, that's not always what's gonna lead the day. So we don't know. One day a trend does not make, but this is a very interesting transition of leadership in the short term. And again, to your point, it's the reason we diversify.
Yeah. And it's I think one of the other big shifts, I mean, it was a change in mindset. It was that, what if things return to normal at some point down the road? Pfizer came out to say they are very close to having a vaccine, and then they've had a lot of success with their trials, which could potentially roll out, before the end of the year here. And so it's that shift in mindset of, okay, if things return to normal, then these areas that have not been in demand will suddenly be in demand again. So we saw a lot of increases in like airlines and travel, in different industries that have just really been struggling this year, and just kind of that hope of, all right, maybe we can do this again.
Yeah. And I think we can use kind of one stock as a great example of this, of the risk of returning to normal. Take something like Peloton. So the fitness stock, cycling, and what are the things that you can still do, can't go to a gym as much more, might not be comfortable with it. Peloton stock was trading around $20 earlier this year. Recently, it was up as high as $125. This week, it plummeted, 25% in a couple of days, touched around the $93 range. So let's think about Peloton stock and what it is. It's that we talk about, does a business have a moat around it? Is it defensible? Can it make money under all conditions? When you have a defensible, earnings stream, then the stock should do pretty well, or it's something that you can hold on to for the long term. Peloton's moat was built by the pandemic. It was built by all the things that you couldn't do because we couldn't go anywhere. If suddenly things return to normal and it has to compete against in a traditionally fickle industry. I mean, look how trendy fitness can be, going back to, whether you're doing, Jane Fonda or Planet Fitness or whatever it might be over history, when they have to compete, suddenly the stock isn't worth as much. So that's what we're thinking about when it comes to picking stocks or investing. Is your portfolio defensible in a normal environment? And that's a fair question to ask this week.
Yeah.
So, Katie, you found the article on European banks, which is another area where what happens when things return to normal. What did you find in that story?
Yeah, so this was in the Wall Street Journal, and it highlighted some potential risks that could be out there. The European zone, similar to the U.S., has had a lot of stimulus pumped into them, and the stimulus has really been holding up debt on a lot of the bank balance sheets. So where banks are not receiving, or they've put on holiday, as they put it, some of the payments coming in, the European bank, the central bank, is helping to support those banks. And so the loans, and part of the challenge is that they might have a lot of bad loans on their books, or loans that potentially will not be paid after we come out of this pandemic. But right now they're receiving funding for them. And so they're still showing up as, positive assets, essentially, on the bank balance sheet. And so the article highlighted that almost 25% of the loans on the books are being supported by stimulus funding, which actually over there is quite a bit higher than we're receiving here in the U.S. But it did highlight that coming out of this, there's the risk that there could be up to $1.7 trillion of bad debt, which is more than the financial crisis. They said that's a severe, outcome. It may not get to that, and we'll have to see how much of a Band-Aid will that provide, and will they kind of be able to skip over that, or are we going to look up and there's going to be a lot of loans and defaults coming out of this pandemic? So it's just kind of cautionary.
Yeah, I mean that's the condition of this zero interest rate world, is that there's so much leverage built in, there's so much debt, and that's again coming back to the moat idea. Which countries, which companies are able to make money on their own, independent of the European Central Bank, the Federal Reserve, all of these mechanisms that are designed to keep things inflated as long as we can it bridge to the other side? So I think it's one of those unique challenges.
Interesting too that we're seeing these economies drop significantly. So the Eurozone as a whole, just in the second quarter, had about a 12% drop in their economy, but yet you're not seeing that with defaults on the other side. And that's just this weird, disconnect that we're kind of working our way through right now.
Yes. Mm-hmm. Another disconnect and potential bridge down the line that's going to be a little bit challenging is with students and their choices about how to pay for college. I mean, we talk about some of the big checks that parents write, that people create significant liabilities in their lives. It's around the college experience. What did you find in that recent article, Katie, about what college students are thinking right now?
Yeah, and once again, this was an article from CNBC reporting that 38% of current college students are concerned that they're not going to have enough funding to even last them this semester. And it's a convergence of a few different things. It's expressing frustrations and the challenges of the online virtual learning, especially when you get into some of the very technical topics and subject areas where it's difficult to stay focused on the computer. I think we're all challenged with that at this time, right. To stay completely focused, for multiple hours at a time. And they had one student that mentioned, if I zone out for 5 minutes in my 2-hour lecture, I'm lost for the rest of the lecture. And so the concern is it's going to be difficult to keep the grades up. The learning environment isn't as strong. And if the grades aren't up, then merit scholarships may disappear. And a lot of students are dependent on, a lot of those merit scholarships. And then on the other side of that, parents provide on average 44% of the cost of college education for students. And a lot of parents are under financial stress. And so if they may not be able to fill that gap. So if scholarships are lost, they might not be able to fill that gap. And so students then are applying for more and more scholarships, trying to fill that gap, which is creating a very competitive landscape in the scholarship world also. So there's kind of that convergence of challenging learning environment and access to money being a little tighter.
Yeah, and then you have the colleges coming out and saying that they're doing a lot more cost cutting on their end because they're seeing some people are deciding not to pay at all, and that we're going to see these, the enrollments are down. And how did they compete against that? You and I both have children. I have 4 kids that we're going to be hitting college here in a few years for the eldest. And you think about making economic decisions about some of those major things. And we're having dinner table conversations about how to value an education and a career and everything else. I think that's a massive part of the story of the next decade, is what happens in higher education and how the next generation gets launched into the economy.
Yeah, absolutely. Yeah, I think it will be fascinating over the next few years. I think there's going to be some type of overhaul to the financial system of education.
Right. It all comes back. I mean, if something we always harp on is be careful projecting today's circumstances out into perpetuity. I think, like 2 years ago, if a college was projecting what they were seeing then, tuition increases, all those other things into perpetuity, they're in a challenging place right now, for sure.
Well, we're seeing pieces of that. I mean, even prior to the pandemic, we started to see those year-over-year cost increases starting to level out a little bit. They weren't as steep as they were in the first part of this century.
Right.
They started to level out a little bit, and more creative ways to pay for school. Even private equity coming in and creating different tools that might a student may commit to providing a piece of their income post college in lieu of taking out student loans. And so it's something that the wheels were already turning, and this is one of those areas that's going to accelerate very quickly.
Yeah, very true. Very true. All right, so we are recording this on the 11th day, the 11th hour of the 11th day of the 11th month, so the historical end of World War I, but also Veterans Day. We serve many veteran households and families who've served, and just a lot of friends out there and family members. We want to thank you for your service and thank you for your commitment at a time of your life, and presumably in your youth when there were a lot of other opportunities for you. You chose to serve our country. So just a great thank you for that. Katie, you have some service members in your family?
Yeah, a couple. My father was in actually Navy Reserves for 9 years, and just had a few good stories from that. My husband's grandfather was a pilot, and I'm trying to remember exactly when he flew, but World War II. Actually, he was a World War II pilot, and just once again, fascinating stories that he was able to share with us. So
fantastic. Yeah,
definitely. Thank you. It's a lot of work, a lot of commitment, and we're so grateful. So grateful.
Yeah, this is one of my favorite days just for reconnecting. So I served for 4 years in the Army, in Patriot Missile Unit in El Paso, Texas, and some overseas. And just the text threads going back and forth between some friends and I, just about that period of our lives in our early 20s when we were learning a lot, kind of coming into our own professionally and personally. It's just a good time to reflect and sharing a lot of stories. So the phone will be buzzing tonight with some back and forth, and it's going to be, it's always it was a great experience, a lot of bad haircuts, but great experience. So. All right. We wish you and your families the best. If we can be of assistance, please let us know. Always love your questions and your feedback if there's a topic you'd like to hear us cover in one of our market updates. And we look forward to catching up with you soon.